Everybody knows Uber, Theresia, and I just wonder whether that sort of will be the most important thing in buying the EPO or pricing it rather than the future profitability of the company. A lot of times it doesn't really matter. People know it. People get excited by it. We've all had an experience with it. Does it matter that it's not profitable and may never be profitable?
Well, I think that it doesn't matter that it's not profitable right now. Clearly, not only about Uber, but if you look at the tech IPO market right now, buyers, investors are buying stocks that are high growth, going after multi-billion or in this case trillion-dollar markets.
High revenue growth.
High revenue growth, despite the fact that there's not yet any earnings visibility. And I think that right now investors are showing patience around earnings and waiting for profitability. So I think it's clearly a growth story. Right now, the market seems to like growth stories, and these stocks are generally performing well.
I mean, they're pricing it for some interest. I mean, if we all heard the 120 number, and now the midpoint is 80 and change.
Only slightly above their private market valuation. So I think they're clearly looking at the differences in the aftermarket performances of some of the recent tech IPOs. Obviously, they will trade in unison, I think, with Lyft, since they are competitors and in the same space. And I think that they're probably wisely trying to make sure that the IPO buyers will still have some upside.
They're clearly trying to differentiate themselves from Lyft and also trying to describe themselves almost as an Amazon-like company. Is that an apt comparison, or you think fair, unfair?
I think it's still too early to say, right? Because the potential value of the platform as it relates to autonomous vehicles is still early days. Look, Dar's a really, really smart executive and a great human being. So I think he's got a great vision. I think that's, futures, right? They're investing a lot in AV, and we're still TBD when we'll actually have that in the marketplace. And to be a platform, other people need to be using your technology in the same way other people use AWS. Now, clearly, that was many, many years after Amazon's IPO before they became a platform. So it just depends on how much patience investors have.
It's just weird when a company has to say, don't judge us by what our core business is. You know what I mean?
Amazon did that for a while, too.
I know, but don't judge us by that. We got Taco Bell delivery. Which appeals to me, which I've said many times, Uber Eats. But are all the bells and whistles in the ancillary businesses, are those businesses innately more profitable than their core business?
I think that they probably are. Again, although quite a bit of them, as you mentioned, Joe, a lot of them are still early days. But you bring up a good one, which I kind of overlooked a little bit. I went straight to the autonomous vehicles. But you're right, Uber Eats is a real business. It's not a huge part of their business.
Taco Bell. I didn't just say Uber Eats. I mean, that was.
Sorry, I need to be more specific.
But Uber trucking, you think all of these other businesses get there before? Do you think that this can be a profitable company before you get to autonomy? Do you think that should, or should that even be part of an investor's thesis? How about that?
I think that it's possible, but probably not. It won't be super profitable until there's some form of autonomy. It could be in trucking and delivery, not necessarily in the core passenger platform, but you need to have some level of significant automation in one of your core businesses to get significant profitability.
And then what's your bet on autonomy, broadly speaking, right now, in terms of where the technology is, where regulators are?
So I don't know that much about regulation, but I invest in early-stage tech companies. We have a couple of companies. We invest at the very early stages, Series A, in the software space, serving various autonomy players, things in mapping or visualization. I've actually seen some hesitation in terms of when people think. So they talk about autonomy, sort of level 1, which is some driver-assisted, level 5, full autonomy. Almost everyone I spoke to, no matter how optimistic or pessimistic they were, in the last 6 to 12 months, everyone seems to be pushing out level 5 by about 12 months. Okay. So people are still, even the bulls are still bullish, but they're being a little bit more cautious.
Theresia, you said something at the beginning of the interview that caught my attention. You said right now the market is valuing growth. And I think that's something that I think about a lot with these stocks. If you're going to buy into it, you need to realize that there could very likely be a lot of volatility, because this is something that goes in and out of fashion with the market at any point in time. And if you're not a company that can point to hardcore profits and here's our dividends and here's these things, you need to realize that just investor sentiment is going to play a big role in how your stock trades.
Absolutely, and I think so there is definitely investor sentiment in the market. Obviously, moves from seeking growth versus seeking profitability. I believe we're clearly in a growth type of market. However, I will say that in terms of a market being large enough for two significant venture-backed competitors, people sometimes ask about Lyft and Uber. Is there really room for both of them? Look, they're going after trillion-dollar markets with
Right.
massive technology disruption. Even before autonomous, there's still some pretty significant disruptions. And I think about my personal experiences in the real estate space, where I was an early investor in Trulia. Zillow went out before we did. Both companies did very well as public market stocks. They both performed very well in the aftermarket for the first 6 to 12 months. Obviously, then they sort of 5 or 10x their values from IPO and ultimately became one company. But that's an example where the market is large enough, and there is definitely room for two technology disruptors.
So, Theresia, Alpha Girls, there are 4 ladies in Silicon Valley that were able to become stars in the cutthroat, high-stakes, male-dominated world of venture capital out there, and you're highlighted in there. Compared to when you were making inroads, is it better, the same? Do you see things are easier now because of pioneers like you, or it's still tough?
Oh, well, it's humbling to be called a pioneer. I don't know about that. I would say that I think things are better in the sense that the numbers are there more, and that people are talking about the need for different points of view, and that's diversity along a bunch of dimensions. That certainly wasn't something that was spoken about 10 or 15 years ago. But actually, if you read the story, and the reason why Magdalena, Sonia, and I think agreed to be interviewed by Julian is that she really wanted to paint a realistic picture of what's going on in the face of what people perceive that it's a very closed society. All 4 of us were outsiders, and we've all we've had some lucky breaks. We've worked hard. We've done pretty well.